Hey, David. Yeah, long versus shorts, calls versus puts, bulls versus bears. Two sides of a trade make a market, but in GameStop, it was more than that. It was like an online battle straight out of a video game. The saga started months before GameStop started truly rallying. Melvin Capital, then a $12.5 billion hedge fund, disclosed a short position in GameStop through put options, which quickly got shared on Reddit's Wall Street Bets forum. Trouble was, Melvin wasn't alone. More than 100% of GameStop's tradable shares were held short a year ago. So, as the stock surged over the course of January, thanks in part to retail investors swapping stock tips on social media, the general consensus online was to be long GameStop and force Melvin and other hedge funds to cover at a loss. That triggered a spike in GameStop shares toward the end of the month, which were propelled even higher. Melvin posted 2021 returns of negative 39%, according to a source, thanks in part to that squeeze. While it can be fun to paint the narrative as the small guys beating out the big guys, that wasn't necessarily the case if you kind of peel back the onion a bit. Senvest had actually been long GameStop and notched the year's best returns for any hedge fund with 85% gains. Still, the events of last January were a cautionary tale about short seller disclosure. Hedge funds became extra protective about where they went short and how they revealed it. Short positions don't have to be disclosed in SEC filings, but options such as puts do. And short interest in general remains pretty tepid, as many investors who believe there's a fundamental basis perhaps to bet against a stock chose not to over fear that it will become the next short squeeze, guys.
Yeah, interesting. Of course, Melvin, I hear, by the way, Leslie has had a brutal opening to the year as well this year, though not due to any sort of a short squeeze. But, I got some numbers yesterday that indicated that perhaps it's down as much as 10% in the early going. Longer term, are we done, though, with this Reddit trade? It doesn't seem to be as active right now, certainly. Could it come back, or do we think it's going to be dormant for a while?
As we kind of reflect on the last year, I started wondering whether anything's actually changed structurally that would prevent something like this from happening again. And David, I really struggled to find a reason why it wouldn't happen again, whether it be GameStop or another company, because there's been no change in regulation. There haven't really been much in the way of changes in terms of structural aspects to this market. Robinhood's still functioning the same way, essentially, that it did back in January. There are no new SEC rules that would prevent something like this from happening. I guess the big change would be just the level of short interest out there, but there are certainly stocks that do have a high level of short interest that people say could be prone to squeezes. So no, I don't see anything that prevents it from happening. Is it rare? Yes, but nothing necessarily would be in the way.
Leslie, I mean, this is something that became a Main Street phenomenon, right? How many retail traders, how many new day traders to the market, sort of were lured in by everything that we saw take place last year and, of course, all the media coverage of it. Do we know a year later how many of those people are still active in the market?
We don't have specific statistics on GameStop in particular, how many individual traders that were bullish on that are still holders of GameStop. However, if you speak with retail investor experts, they'll say that oftentimes they do hold on for a lot longer than you'd expect. However, if it's momentum stock like GameStop, sorry, haven't said those words in a while, but you do tend to see people riding up to the highs and then selling out oftentimes before it gets back up to those levels.